It's 4th of July, guys. Happy 4th of July to you if you're in the United States and you're watching this. It's about 9:20 a.m. on the 4th of July, 2025, so July 4th. Happy 4th of July to you if you are in the United States, or if you're in other countries and you celebrate it. Happy 4th of July to you. And guys, I just do want to say real quick, make sure you make it a safe 4th of July. Uh, Obviously, if you're drinking, don't drive. Obviously, if you're using fireworks, use them safely. Don't hold them in your hand. You light the firework, you throw it. Don't throw it at anyone. So make sure you keep yourself safe and others around you safe if you're using fireworks today, right? Don't combine alcohol with fireworks. That never works good. So stay safe and have a great holiday today and keep yourself safe at all times, safe and secure at all times, and the others around you as well. Now, talk about a little bit of what went on in the markets yesterday and also today here. I'll go through the charts. Some other things I want to talk about. I'm not sure what I'm going to get into here. I guess I'll see where it takes me. But again, these videos are for education purposes only. These videos are actually a result of the education I learned with the community I'm with and the strategy here, the ATH RSI Sniper Pro 15-minute trading plan that I show you here every day is a result of using the indicator that we have available in our community and the scanner that's available through the company we're with, GFU. And that scanner is the Sniper Pro scanner. It's just one of 9 scanners that you have access to when you join Sniper Pro. And the strategy really is, again, using our community indicator and the training in our community and the Sniper Pro scanner, along with the training from that scanner that we get from John Oliver, who is the creator and the educator for that scanner with GFU. Okay, so Forex is risky. You can lose all or part of your capital. And if you're a beginning trader or even intermediate and advanced and you're trying a new strategy, you should always trade on demo first until you are sure that it will work for you and that it will be profitable, right? Um, so this is AUDCAD. And yesterday I took this trade here in AUDCAD. Um, I made a mistake on this trade, so I got out with a small profit here. I'm not going to go into my mistakes because you're probably enough of hearing about those, right? Again, when you make a mistake in trading, I did a video on this or a live session the other day where there's the 5F rule, right? Right? How do you deal with your mistakes? You want to, and the 5Fs are frick or some variation of it, right? Once you see you make that mistake, you say frick or some variation of it, right? You then finish, you fix, you focus, and you forget. So that's how you get through your mistakes. And so I did make a mistake on here, got a small gain, but you could see here this goes through. And this candle right here is a news candle. This is the 8:30 news. There was a lot of high impact news coming out at 8:30 that involved both the US dollar and the Canadian dollar. So this really made a big push here. Now, as you know, guys, we always advocate that we don't want to take any trades. We don't want to open any new positions if there's news coming out on the pair that we're going to trade. And again, if there's news coming out on US dollar, then that affects every Forex pair. If it's not on the US dollar, then we just want to stay away from trades, including that pair, that currency, right? So we don't want to take trades 30 minutes before to 30 minutes after any news event. So if there's news coming out at 8:30, we don't want to get in any new trades from 8 to 9. The reason for this gap is because a lot of times you'll find if you're trading on a 15-minute time frame like I am, that the news will affect the market sometimes 2 candles before. You'll see like a big move up or down 2 candles before the news comes out. And then when the news actually comes out, not much effect on the market, right? So you see that a lot of times. And then, of course, you don't want to trade after because there could still be some lingering effects from the news. And also, sometimes the candles just push the market too far in one direction or the other, and your setups just don't work anymore. And sometimes you have to just stay away from trading for the rest of the session, because the move has now threw off all your technical analysis, right? But anyway, you could see here that, and the point I want to make is, and I'll elaborate on this later, but many traders in general seem to be very, very fearful of news coming out when they're in a trade. So we know we're not going to take any new trades 30 minutes before, 30 minutes after. So that's out of the way. Now, what happens if you're in a trade, right? You're already in a trade, right? In this case, I was already in this trade. I got in at 6 o'clock in the morning, right? Obviously, I know news is coming out at 8:30, but it's 6 in the morning, so it's safe for me to take the trade. Now, what do you do when you're in the trade and you see the news is coming out? This makes most Forex traders, or I want to say the average, normal, logically thinking Forex trader, which I'll elaborate more on later, very fearful, very scared. Oh my God, there's news coming out. I got to get out of this trade. What am I going to do? What am I going to do? So again, it's up to each individual trader to decide this for themselves. But I look at news coming out on a trade that I'm in. I get excited. I get excited because now there's an opportunity for my trade to move in my direction much faster than it normally would. We all want to get in and out of trades quickly, right? With our money, with our profit. Okay. Now there's a chance of that moving more quicker than it normally would. Now, I know there's also a chance it could go against me much quicker and I can get stopped out of my trade with a loss. I know that. Okay. But I took this trade for a reason, right? The trading plan told me that this was a good trade to take, right? I got my indication right here, right? Um, I didn't see it right away because that was at 4:45 in the morning. So when I came to the charts, price was still close to the original entry, so I took the trade. So this happens sometimes. Sometimes these trade idea alert signals, whatever you want to call them, trade ideas that are confirmed by the scanner, Sniper Pro scanner. This one was confirmed. It was at 4:45 a.m. When I got up and I came to the charts here at 6 a.m., it was still close enough for me to take the trade. So I took it. There was a reason for me to take this trade. Okay. So I have every reason to believe that there's a chance that the news coming out will move this in my favor. Right. So in this case, if the news is coming out in right Canadian dollar, if the news is good, if the market perceives the news as being good, right, or positive, then this should continue dropping, right? Because the Canadian dollar should be stronger against the Australian dollar in this case, right? Now, if the news comes out the other way, then price may move against me. Okay. So at this point right here, 8:30, I'm already profitable in this trade. Okay. Now, like I said, I made a mistake on this trade, which I'm not going to get into. And I was taken out of this trade um, prior to this candle happening. Okay. Again, big mistake. I went through the 5X, right? But anyway, just to show you how this moves, you get a massive move in your favor in this particular case. Now I know it can move against you, uh, but you get a massive move in your favor. And again, following the trading plan that I outlined for you guys, and I get a copy of that. If you don't have it already, just get with me, message me here on Facebook, or send me an email to bill@sorianoblueprint.com. Again, bill@sorianoblueprint.com, and I will send you out my free ebook. My free ebook is basically for beginning traders, but there's a bonus chapter at the end which gives you this trading plan. Okay. So if you don't have access to the trading plan yet, um, just request my free ebook. Now, with this, we would have locked in a significant profit here, and we would have gotten taken out of that trade. We would have had an opportunity to lock in profit and get out of this trade. Okay. Now today, or I should say last night at 8:30, or I guess I should say 8:15 p.m. Eastern time, we get another trade alert trade idea alert here that is confirmed with the scanner. And you can see the price does move pretty good. You almost get to the point where you can lock in some profits, not quite, but you definitely are at the point where you can move your stop loss to break even, right? As price moves down to here. So you'd still be in this trade at this point. Okay, now again, the first thing that I want to talk about later is trading during the news, what to do, right? And how the average normal logically thinking trader thinks. And also this is another a topic for discussion is trading during holidays, right? So most traders, again, most average normal logical thinking traders would stay away from trading during the holidays. And we'll talk about that a little bit later. But you can see here that this you get the reason to take this trade, and it does kind of move in your favor here, even though we are moving into a holiday here this morning. Let's just see what other ones we could talk about here. You're going to see most of the ones involving the Canadian dollar. Again, this was CAD Chef here. We had a trade ID alert that was confirmed with the GFU scanner. And again, there's that news candle shooting up, right? And again, in this particular case with this news, the trade moves very little against you as this news comes out. There's very small move against you if you're in this trade long, like we would be here following our trading plan. And it moves very, very little against you, right? Same thing in OddCAD. In OddCAD right here, basically no move at all against you. All in your favor. Now, this doesn't always happen. Sometimes you'll get a wick up. So if you move your stop loss to break even, sometimes this will wick up, take you out at break even, and then continue the way you wanted it to go, right? Or sometimes it can just go completely against you. You get taken out at break even, or you hit your stop loss, right? Now, sometimes during news events, price moves so fast that it may go through your stop loss slightly, right? So you might not just get out at break even. You might actually lose something. And here you might lose more than your 1% stop loss if that's what you do, right? But in this particular case, and this is why I get excited when news is coming out, I just watch the trade very closely. And if I can't watch the trade, then I would most definitely either exit the trade if I was in profit, or move the stop loss to break even, or just get out of the trade completely. Right? Or just stay in the trade and wait for my stop loss to get hit if it does, or let it run. Right? So again, if I can't watch it, I'm going to do things a little differently, right? But if I could sit at the computer screen and watch what happens, I'm going to do that. Okay, let's just see which other ones we have here. Again, EuroCAD, Canadian dollar, right? We did get a trade idea alert right here that was confirmed by the scanner. And of course, there's that 830 candle moving in our favor, and then it continues to move as well. Right? So there you see it. This was EURCHF. This gave a trade idea alert right here at 3:15 a.m. Again, a lot of risk, okay? But this did move enough in your favor that you could at the very least move your stop loss to break even, and you'd probably be out of this trade at break even. Let's just see what else we had here yesterday and this morning. Here's something that a trade idea alert that you just get right here at 9:15 a.m. today, right? Let's just look at the scanner to see what this is saying about GCAD. So here's our candle right here. Here's our 915 candle. Okay. It's a nice gold candle, which is good for a buy. A nice blue sniper arrow, super sniper arrow underneath it. We have a blue sniper line and a blue dash trend line in the sniper later, which is all good. But what we don't have, guys, is price never gets into that lower volatility band. And the close of this candle is well past that halfway point. So this trade is not confirmed with the scanner because we need to have one or the other. Price either needs to move into the lower volatility band for a buy. And if it does, then this candle can close above the midway point, but not by this much. This is kind of a lot. Okay. But in this case, we don't get into lower volatility bands and prices past that halfway point. So this trade would not be confirmed with the scanner. But again, you could see there are still trades that you won't get confirmed that will move in your favor. Just like the ones that do get confirmed can move against you, right? We're just finding, though, that the probabilities of that happening, right? There's a greater probability of the trade moving in your favor if it's confirmed with the scanner than there is if it isn't. Just see if there's any others that I marked up here. Okay, here's one right here where we got a trade ID alert that was confirmed with the scanner. And this is currently in drawdown moving against you, right? And again, it is the 4th of July. It is a holiday, so many people would not take any trades anyway. I myself am not trading either, or neither, I should say. But this is just what would happen. And you. Okay, what do we have here? Here's a trade. So this is a trade from yesterday, right? So this alert actually went off. This trade ID alert was right here on Wednesday night at 9 p.m. Eastern time. Okay. It was confirmed with the scanner. And you can see here the price makes a little bit of a move down here. And, that's probably enough of a move for you to move your stop loss to break even. Price comes back up. It doesn't hit that break even, right? And then it moves down, and then here's that news candle right here where we had favorable US dollar news. And so that made the US dollar stronger against the New Zealand dollar. And so we get this big move down here. So we would have been able to lock in profit here. Again, if you just exit the trade because you want to exit when there's news coming out like that, you're in profit. Otherwise, you could move your stop loss to break even. It doesn't get hit in this particular case and moves in your favor. So you'd have an opportunity here to lock in profits with the trailing stop on NZD USD. Again, the average normal logically thinking trader, guys, is very fearful of the news. And they probably have reason to be. It may have had a negative effect on some of their trades in the past. Okay. Me, though, I get excited when I see that news is coming out on a pair that I'm in a trade on. Again, we're not going to trade 30 minutes before. We're not going to open any new positions 30 minutes before to 30 minutes after any high impact or medium impact news on our pair. Or again, if it's on US dollar, that affects every pair. Right. But our currency that we're trading, we're not going to take a new trade. But if we're in that trade already, I get excited because I had a reason to take this trade in the direction I'm going. And I have every reason to believe that I don't have a crystal ball. So I still have every reason to believe that this news coming out is going to be favorable for me. No, it may not be. Just like when I take this trade, I may not win anyway, whether there's news coming out or not. Really no different for me. So I get more excited when there's news coming out. USD CAD, here's a trade again, 3 a.m. this morning on a holiday, right? Trade ID alert comes out, it's confirmed with the scanner, and we're already to the point here where we could, lock in profit. USD Chef, USD JPY, and gold. So that's kind of what it looks like there. I was in a couple trades. Like I said, I made a mistake in the AUD CAD trade. So I got a small amount of profit, but I could have gotten a lot more, right? And I was also in this, I also took this NZD USD trade from Wednesday night. And what happened was I got up in the middle of the night. I seen the price had moved in my favor significantly enough. So I moved the stop loss to break even. And, although here with my broker, okay, so with my broker, my stop loss got hit. My stop loss got hit on this right here. See it? This 4:15 a.m. candle came up and my stop loss got executed because again, you have to factor in the spread. Sometimes the spread has something to do with that, right? So I got stopped out right here. And then, of course, price started moving in my favor, and then the news candle pushed it down much further. So I didn't make a mistake there. I don't call this a mistake because my trading plan tells me that once I'm up a certain amount, I have to move my stop loss to break even. So I was following my trade plan. Okay. In hindsight, I shouldn't have, but it's not a mistake because I followed my trade plan. I did make a mistake in the AUD CAD trade, which I'm not going to go into here. Okay, the reason why I'm not going into is because it involves talking about things that we're not supposed to talk about, right? As far as compliance and FTC regulations and things like that. So that's why I'm not talking about it. Not because I don't want to share with you what my mistakes are, or not because they're so stupid that I'm scared to share them with you, although many times they are. That's the reason it has to do with the FTC and things that we should and shouldn't talk about on these videos. Okay, so some things I want to bring up. I talked about how a little bit here about how the average trader, or what you want to call the normal trader or the logically thinking trader or whatever, gets very scared and fearful when they're in a trade and they see that there's high impact news coming out on the currency that's in the pair that they're trading. Okay. So what I want to talk about here a little bit is, and this goes back to a book that I've been listening to and reading. And since we know that the trading game is 80% mindset, 20% the other stuff. 80% of your success in trading will come from your mindset. We know that to be a fact. We know that to be a fact. There's no denying that. Okay. And so because of that, books like the one I'm reading and other books are very good to read to help you in this journey. So the book I'm referring to, in his book, I should say, The Best Loser Wins. It's written by Tom Hogard, right? The Best Loser Wins. And the title of the book also includes, it's called The Best Loser Wins, Why Normal Thinking, right? Well, normal thinking never wins in the trading game. Okay, very important. Think about that for a second. The Best Loser Wins, Why Normal Thinking never wins in the trading game. Okay, so when I think of the word normal, or I think of the normal trader or the normal thinking trader, that also brings me to the word average. And also, I like to use the word logically thinking, right? Because we would assume that most people that get into the markets think logically, right? We would also assume that the average normal trader is logically thinking. Now, we don't need to take my word for it. You know, we can, if we go to Chat GPT, let's just ask Chat GPT, right? I asked earlier today, is it safe to say the normal trader is the average trader and thinks logically? Okay, now I realize that we could type this in a different way and probably get a different take on it, right? But my take is, yes, it's safe to say that the normal trader refers to the average trader who tends to think logically, but with an important twist. Normal or average traders do think logically, meaning they often approach the market the way they would approach most things in life, right? They look for certainty. They want to avoid loss at all cost, right? Can also include here making mistakes, right? That would be loss at all cost. And they believe that if they do things right, they should win most of the time, like in school or at their job or in their other careers or in their business, right? The problem is that logically, this logical thinking is actually what works against us in trading, right? This is most of us. Most of us are normal, average, logically thinking traders, right? And that actually works against us in trading. And this is why Tom Hogarth's book, The Best Loser Wins, says right underneath it, right? Why normal thinking doesn't win in the trading game. Never wins in the trading game. Okay, markets are not logical in the normal sense. They are probabilistic, and driven by mass psychology. The market doesn't reward the most logical or intelligent person. It rewards those who can handle uncertainty, control their emotions, and follow the system without reacting impulsively. This is why trading is 80% mindset, right? Tells us right here in Chat GPT. You don't have to take my word for it, right? And I'm going to use Chat GPT a little bit because by nature, guys, I'm a chef. I'm not a public speaker. I'm not someone that does podcasts for a living. Uh, Thoughts don't always come to me when I want to get them out. So I'm going to use Chat GPT a little bit here to make sure that I can get my point across to you more effectively and get everything out that I want to say, because I won't remember it if I'm not able to see something and read it. So we know what we're saying is that um, the average normal logically thinking trader is going to be fearful during news, right? And so one of the other things that Hogarth refers to in his book is that traders in general are hopeful when they should be fearful, and they're fearful when they should be hopeful. Okay, so let me say it again. Traders are hopeful when they should be fearful, and they're fearful when they should be hopeful. So what is he trying to say here? Okay. So why Forex traders are hopeful when they should be fearful? When a trade is going against us, most of us will hold on too long, hoping it will come back, right? We don't want to take the loss because it feels like we're admitting it wrong. We hope becomes stronger than logic at this point. And what happens is a lot of us may even move their stop loss further away or remove it altogether, right? So we're hopeful when we should be fearful, right? Now, I don't really understand this because for me, I'm going to set my stop loss on every trade and I'm not going to move it. So, because really the only thing that I have control of is when I take a trade is how much I can lose, right? So my stop loss is always going to be set at 1%, right? I'm always going to risk 1% of my capital on that trade. Okay. So that's the only thing I can control is how much I can lose. Right. So I'm always going to have that in place and I'm never going to touch it. If it gets hit, it gets hit. I move on to the next trade. Right. But there are some people that may move it further away as it gets close, or they might remove it altogether. Or I guess there are even some people who don't even use stop losses. And so they don't want to take that loss and they're hopeful when they should be fearful. Now, the opposite of that is when trades are going in our favor and we're profitable, many of us will close out too early because we fear the profit will disappear. Right? So we don't want to lose our unrealized gains. We become overly cautious and we exit at the first sign of a small retracement. Right? What we should do instead is be hopeful and let the winners run, use a trailing stop, or have a clear exit plan, which should be part of our trade management, right? So this is a problem with trading, that traders are hopeful when they should be fearful and fearful when they should be hopeful. Okay. So so when we get back to this trade here, right? We know that the average normal logically thinking trader is very fearful, right? When the news is coming out on the currency pair that they're in trade with, right? We also know that it's probably safe to say that these normal average logically thinking traders are hopeful when they should be fearful and fearful when they should be hopeful. And we also know, right, that normal thinking never wins in the trading game. Okay. So again, these are just all things to think about. Normal trading never wins in the trading game, right? And the normal thinking would be to be fearful of the news event and to exit the trade, right? So the point I'm trying to make is that maybe we need to think differently. We know we need to think differently because we know that normal trading never wins in the trading game. So, or normal thinking. So if normal thinking tells you that you should get out of this trade and be fearful of the news coming out, and if we know that most traders are hopeful when they should be fearful, fearful when they should be hopeful, maybe we should think about what to do in a trade when news is coming out a little bit differently. That's all I'm saying. Maybe we should think about it differently. You know, in any event, in this case here, you're in a little bit of profit. We can move the stop loss to break even and see what happens. Right? Okay. See what happens. Okay, guys. So let's see if there's anything else I wanted to talk about here. I also typed in how much does the average normal trader lose in the Forex market, right? So again, in his book, Hogarth says normal thinking never wins in the trading game. Do we know that for sure? Well, we know, what does the average normal trader lose in Forex market? We have statistics on this because brokers actually have to disclose this information on client profitability, right? We know that various broker reports, for example, disclose that between 70 and 90% of retail Forex traders lose money. 70 to 90%. Is it safe to say that's the average normal logically thinking trader loses 70, 90%, 70, 90% in Forex market? I don't know. I don't know. But again, if that means that and that normal thinking never wins in the trading game, then we know we have to think differently, right? And that's why books that help you with your mindset are very important because again, mindset's 80% of your trading, of your success. So why do they lose? They over leverage, poor risk management, right? Emotional trading, lack of a tested strategy, unrealistic expectations, right? Again, that's the results. How much does the average normal trader lose in the Forex market? That's the results. Okay. And again, traders are hopeful when they should be fearful, fearful when they should be hopeful. He also talks about in the book about a analyst with a brokerage firm, one of the top brokerage firms at the time that this was done. And this analyst had access to 25,000 traders who were trading the foreign exchange market. And so what he did was he was able to analyze 43 million trades, not analyze, but just get the results of 43 million trades, right? So 43 million trades, this is 43 million trades over a 15-month period with 25,000 clients in this one particular brokerage firm, right? So what did he find out? It's quite amazing. What he found out was that on average, 62% of the trades taken were winning trades. So if I were to tell you that I won 62% of my trades, would you think I'm a profitable trader? Sure you would, right? What they found out was that most traders were negative in their accounts. Not all of them, but most of them. Most of them were negative. And what was the reason for this? The reason for this was that their winning trades, they won an average of 40 pips. They were 40 pip winners. The average winning trade was a 40 pip winner. Of these 62% of trades, 43 million trades that won. The average winner was 40 pips. The average losing trade was 70. So again, losing more than your winning trades. Have you ever heard the phrase, you can't go broke winning a trade? You can't go broke winning trades, right? How many times you've heard somebody take a small profit in a trade? They took it out because they got scared, took a small profit and says you can't go broke winning. What's the I can't remember the phrase now. They'll say you can't go broke winning trades. You actually can. If you don't use proper risk to reward management, you actually can. As evidenced by the fact that in these trades, 62% of the trades were winning trades, that most of his clients had negative accounts because the average winning trade was 40 pips, the average losing trade was 70 pips. Again, traders are hopeful when they should be fearful, right? When they're losing a trade, they'll tend to move their stop loss or remove it altogether, and they'll tend to let the loser run. When they're winning trades, they get fearful when they should be hopeful, and they'll cut their losses short, right? They'll either cut their losses short, or some traders like to sell half their position, right? Some traders like to sell half the position and maybe move their stop loss to break even at a certain point, right? And again, don't get me wrong, there's a lot of very profitable traders out there that will advocate, hey, once I'm up a certain amount, I sell half my position, lock in that profit, move my stop loss to break even, and let that trade run. Okay? It's a very popular thing to do. You know, very popular thing to do. Let's see what GPT has to say about that. Okay. I said here, why is it not a good idea to sell half a position when it's in profit? Great question. Many traders instinctively want to lock in profits by selling half their position once it's in profit. While this feels emotionally safe, there are some strong reasons why it's not often the best idea. You limit your upside potential. This is how you go broke winning trades. You limit your upside potential. When you sell half, you're cutting off a big part of the possible gain if the market continues in your favor. The best trades are often ones that trend strongly, and if you reduce your size early, your remaining position can't capitalize fully on the move. It messes with your risk to reward ratio. Most solid trading plans are built on positive risk to rewards. Example, risking $1 to make $3. By selling half early, you effectively change the math and lower your average reward. Over time, this can make your edge disappear, even if your win rate stays good. This is how those 43 million trades from those 220 or those 25,000 traders with a 62% win rate, this could be one of the reasons why they had negative accounts, right? Because the winning trades were on average 40 pips, the losing trades were on average 70 pips, right? Again, there are a lot of very profitable traders out there that will tell you to sell half position, move your stop loss to break even. My opinion is I don't want to do that. I've done it in the past. It never made sense to me that I heard everyone saying it. Never made sense to me because the math doesn't add up. The math doesn't add up. Okay, so I think that's all I want to say today, guys. Again, have a happy 4th of July today and the 4th of July weekend. Stay safe. Don't drink and drive. Stay safe with the fireworks. Obviously, don't combine drinking with driving or drinking with fireworks. Have a great weekend, guys.